Hi everybody, Alex Ployer from Expert Forex, and as the slide says, the only way I know to create real, true trading wealth is to use portfolios. And in this video, we're going to be looking at the use of portfolios and the benefits of using portfolios. And I'm going to be showing you what portfolios are. I'm going to show you a practical example of a portfolio and how you can fund portfolios. When using portfolios, you are required to trade a number of strategies at the same time. And a lot of people think, oh, I can't afford that. I'm going to show you an easy way. And then the most important one is how you can instantly find really good strategies to put into your portfolios. Now, this video was prompted by a post in the forum which happened earlier today, and I'm just going to read through the post. And the forum member says, I get the best set files from your website, but I checked in the last 4 months and 1 month is running fine and then the second month is making a loss. How can I ensure the future? Please help. That's the sort of basic question that came along, and here's my answer, and let's just read through it. And this will, as I say, this is just an introduction to the topic of our chat. So I said, thanks for your post. That is absolutely normal. Most robots have losing weeks and losing months and winning months and winning weeks. If you can find one that wins every week and every month, please let me know. So those are very rare. But the trick is actually to master risk management, because if you master risk management, you won't be hurt when the robot has a drawdown. So the first thing is use low position sizing. In other words, if you're going to make a loss and your position sizing is low, then your losses will be smaller. Really basic suggestion. A lot of traders don't realize that simple cure to drawdowns. Then use an account with high leverage. A lot of the damage that is done to an account is because the leverage is not high enough. So use a high leverage account. Thirdly, use an account that is properly funded. And again, most of our blown accounts are because people are trading settings that have been designed to be traded on a $10,000 account on a $300 account, and they think that would be safe. Then the next thing is test your strategies thoroughly on the strategy tester before you start trading it. What that does is it gives you confidence in the robustness of your strategy. And then lastly, I say trade many strategies at the same time, so that when one account is having a drawdown, the others can help it or cancel out the effects of that drawdown. So that is my basic answer to the forum member. It does really put into place some of the sound activities that have to take place to help you create more robust settings. But let's get back to the topic of this video. Now, I don't know if you noticed my signature at the bottom of that post, but I'm going to read the signature out because it is very important, and that is why I have made this my signature. It's been my signature for a very long time now. So it says, Forex trading is not that complicated. Traders seem to like to make it difficult and complicated. The secret to great sustainable Forex trading results is to create a portfolio of many EAs or many strategies, time frames and currencies and trading instruments, using the best EAs for sideways and trending strategies, and using 1 cent accounts if you have to. That way, no matter what the market does, you will sleep easily and you will make a profit because you don't need to guess what the market will be doing next. You know that you are hedged from that perspective. So I'll mention a few things there, and then we will go into those items in a little bit more detail further on in the video. Now, the second reason why I'm doing this video is that we are starting a linked service in the next 2 weeks. Now, this linked service will allow you to link your own trading account to the trading account of successful proven strategies. That's a big jump, because then it means you don't have to go through the learning curve of learning how to optimize and select strategies over a long period of time and then create a portfolio from there. We are supplying you with winning strategies right up front. And here's an example of the strategies that are currently on the list to be made available when the service is launched. And as you can see, there are various statistics shown here. The most important one is possibly the monthly gain, because the monthly gain brings all of the strategies to a common statistic that is easy to understand. And here you can see there are some strategies that have fantastic monthly gains, and you can go down the list and so on, and you can therefore select which strategies you want to do, because you can also look at the drawdowns, which play quite a big role in these type of strategies. If you some very high gain strategies have very high drawdowns, what you're trying to do is get the middle road where your risk is manageable but your gains are quite good. So there's the list. But one of the things that comes out of this list is that you can see the Profit Retriever is by far the most used EA for traders that have been successful or are trading successful strategies. And there's a reason for that. And here's the marketing page for the Profit Retriever. And you can see one of the claims there is it makes profit no matter which way the price moves. Now, remember in my signature, I said, you've got to find an EA that is a trending EA, and you have to find an EA that's a sideways market EA and combine that. Now, with a Profit Retriever, it doesn't matter whether the market's trending, going sideways, no matter what it does. So it will make those gains eventually. But if we go back to the previous slide, you can see the capital that these traders are using to start with. That is the initial capital. And you might say, Alex, I haven't got $10,000 lying around that I can participate in this kind of trading. Now, the answer is you don't need $10,000, because to build portfolios, it is best to use cent accounts. So a cent account basically says that you can take $100, and because the $100 is in fact 10,000 cents, you can trade that account as if you have $10,000. So it fools the robot into thinking that you've got $10,000, although you only have $100 invested in that account in reality. So that's how it works, and that allows people to build nice big portfolios, a smaller investment. Please go and watch this video to see how these cent accounts work. What I like about this particular cent account that I like using is the broker gives you a bonus, which is obviously very good from a Profit Retriever trading point of view. They give a 30% bonus, and the other thing that they do provide is 1,000 to 1 leverage on cent accounts. So what I'm going to show you now is a portfolio that was built up using $10,000 accounts. As I said previously, you can create a $10,000 account with $1,000 if you use cent accounts. So this portfolio that you're going to be looking at now will only cost $2,400, but you'll be able to trade a $240,000 portfolio. Now, even that is pretty high, and you do not have to trade 24 accounts, but this example is what I'd like to show you so that you can appreciate how the dynamics of portfolio trading. So let's go and have a look at a portfolio that's been started with $240,000, 24 accounts of $10,000 each, or 24 accounts of $100 investment. So on your screen you can see the portfolio that is currently being traded as a portfolio, and just going down the side you can see the account names, you can see the balance, the current balance on that account, and then the equity balance on the account. And now the equity balance is actually the most important because it takes into account the account balance but also open trades. And you can see a mixture of results here. Some are doing have made nice profits, some are not making profits, they're having big drawdowns. There's a big drawdown. You can see the drawdown is shown there, floating profit and loss, 7,000, 5,000 drawdown there, 7,000 there, and so on. And here we've even got one with 10,000 drawdown. So the drawdowns can be very high, and that is one of the reasons why portfolios are suggested, is that as one account has a big drawdown, the others can offset the balances on that drawdown. And I'm going to show you a little bit more about that. And the reason why I use this kind of approach is that I can then see how often the portfolio link to FX Blue is updated. And as you can see, it's quite regularly. The biggest update is 4 minutes. So let's go and have a look at the portfolio in a little bit more detail. Okay, so here's the portfolio, and as you can see, the profits to date are $161,000, but there's a drawdown of $47,000. So you can see the profits are outweighing the drawdowns. This portfolio has been going for 119 days, which is about 4 months. And you can see it's been making a profit of 24% a month. So that is how the portfolios go. You group a whole lot of accounts together. They become a portfolio, and then you manage them from there on. So as you can see in this equity balance, the equity has gone up almost $100,000, which is really fantastic. And it also shows the power of the profit retrieve. So what I'm going to do is I'm going to go look at the portfolio, and here is the portfolio. And what I like about this view is that it's sortable, and there you can see the top performer has an equity of $54,000. Take away the $10,000 starting, so it's made a profit of $44,000. So it's actually, if you look at it, you can blow 4 accounts and have an account like this, and you'll still break even. So that's the idea behind portfolio. The winners offset the losers quite nicely. And here you can see there's a lot of really good winners in there, and I'll explain why these winners are as good as they are. And then at the bottom here, we have some of the losers where the equity is quite low. But as you can see, there are only 5 losers here. So that first account, the first and second account basically pays for all the losers, and all the gains are nicely offset that way. Now, why are these accounts so robust? So firstly, what happens is that we take a set of settings, and they mainly come from our free and paid settings that we provide in our portfolios. We start trading those settings. Then after 1 week, we have a look at the account and we say, hang on, this account is too risky. The lot sizing is too big. So then we start making adjustments. Or we say, oh no, the gap size is too small. We must increase the gap size. Or we find other adjustments that we need to make. There's only a few adjustments to make with the profit retriever. And we therefore adjust the settings on a weekly basis to manage risk, but also provide nice leverage for really good gains. So that is the approach we take, and we go through all those 24 accounts and adjust them on a regular basis. If they're doing well, we don't touch them. If they're doing badly, we start changing the risk elements, and we say, look, we don't want to have such big drawdowns. We'll lower the lot sizing and things like that. So it is a dynamic thing. A lot of clients say, oh, I want the set files for those accounts. No ways you're going to get the set file. The set files that we'll give you will not work next week because they have changed. We actually change the set files on an ongoing basis, and that's the only way that you can really learn how the EA works, learn what to do when the EA is not working, and to build a portfolio that works as well as this one does. So that's why these results are above average. They are supervised and changed by experienced traders on an ongoing basis. And that is the value of the linking service. Rather than you doing all of this hard work, changing the settings and things like that, we are making some of these accounts available through the linking service. And as you can see, there's some names, some of the names are still the account number, but some are the linked number. So the linked ones are the ones we're making available on the link service, and some of the others are still not good enough to be linked. What I also like about FX Blue is the statistics that you can get from portfolio. So I click on portfolio, on statistics there, and there are all kinds of statistics, like there's all kinds of charts you can look at. There's the balance profit bank per day one, for instance. The symbols, you can see which symbols are the best to trade, and you can see the pound is by far the best symbol, and the euro yen hasn't done as well. So those are the symbols that have been traded in these portfolios. Direction doesn't really, not something you can control. Then we can look at the monthly, and you can see every month has been nicely profitable. There are 5 months there, so all nice and profitable. The weeks have been very good. There's been one little week there that's been problematic, but on the whole, weeks have been nicely profitable, and days, same thing too. There have been a day or two where there have been big drawdowns, but other than that, the days are nice and profitable. And then you can even look at the hours, which hours are the ones that make the most profit and which hours make the least profit. So it's pretty handy to analyze these statistics on FX Blue, and then we take that information into account when we do the weekly reviews, and we start noticing trends and settings that really are robust, that help a lot. And that's how FX Blue helps design strategies that are really robust. And then we again look at the strategies, and you can sort the strategies by profitability. So that strategy, and you can see that there's fewer strategies than there are accounts, because we're using the same strategies on different instruments. So you can see some strategies are highly successful there, and others are less successful but still profitable. So again, all our strategies are profitable because of this manipulation on a weekly basis and correction and that type of thing. It really teaches you how the EA works. And then we've got another version of the one that I showed you earlier, where you can sort your accounts by profitability, and there's the accounts that you can sort by, and you can also see the winning percentages and all kinds of things. So FX Blue supplies really good statistics when you are portfolio trading, because you look at them very critically, and also they can teach you a lot about your trading. You can also drill down into the actual accounts and see the statistics on each account, and that also helps us refine the settings even more. Okay, so now we're back to the slide where I stated the objectives of this video, and I hope you have a good idea of what portfolio trading is all about. It's not rocket science. You just have a whole lot of accounts that you trade together, and FX Blue allows you to group them together into a portfolio. Now you've seen a portfolio being traded, and you can see that there are some big losers and there's some big winners, and the more you refine that process, the more the losers become less and the winners become more. I've also shown you a video that you can have a look at to open 1 cent accounts. Now those 1 cent accounts are absolutely critical when trading EAs such as the Profit Retriever, that requires $10,000 as a minimum to start with, to reduce the risk sufficiently. So when you're using a 1 cent account, you only need $100, because $100 becomes $10,000 to 10,000 cents, and you can therefore manage risk with $100. And I've also shown you our new linking service, where you can instantly find strategies that you can link to and create a portfolio of. Now I see so many traders taking one strategy, one instrument, and trading that and putting all their eggs in one basket, and they're either going to be super successful or they might not reach the profit levels that they anticipate. And that is why trading portfolios gives you the opportunity to refine your strategies and to create a portfolio of winning strategies and refine the ones that aren't doing well. Also, as I said, you can benefit from the winning side of these portfolios by participating in our linking service. So I hope you've enjoyed this video, and from me, Alex du Plooy, cheerio.